Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about a classical charting concept, price distance. You may not see that exact term floating around, but this has to do with how important a level is and how many touches you're counting on a level. So for example, let's say you have the price advancing, sets a peak, comes back and sets another peak like that really quickly, comes back down and does this. Now the question to you, all right, is this a potential double top? Of course, we're testing the low. Potential double top or a potential triple top, right? 1, 2, 3 tops, right? It's actually a potential double top. This counts as one attempt, okay? Because within the same momentum series, it tried to break through here twice, but within the same move. You didn't have any kind of a reset. You see how we have a reset here to the trough or the low, and then the price bounced again, and it attempted again. Now, in this case, you have something called price distance. You have significant enough price distance between the peak and the trough, or the high and the low, as opposed to just between this peak here locally and just below. This is not enough of a move to signify that there was any kind of a change in momentum. There's any kind of a consolidation, right? So when you think about how many touches a level has or how well formed it is, right? So for example, like here, right? Is this 1, 2, 3, 4, 5, 6? No, it's really 1, 2, 3, 4, right? In between here, it's basically the same move. Same move here, it's basically the same move. So when you're thinking about, when you're trying to decide again, you know, how important the level is. We know the rules. The more times the level is tested, the more important it is, and the more significant the break of that will be. Like this is 1, same as this is 1. But the difference between these two, you have the price distance between trough and peak, and here nothing happened. So the concept of price distance helps you understand whether a level, how well a level is formed, and it tells you the story of move, consolidation, move, as opposed to move, consolidate, but still within the same channel and move. There's a big difference between this and this. This is a deeper consolidation. This resets things. This kind of just still hasn't really paused or moved yet, and is continuing. So it's oftentimes discussed most when we're talking about a potential, you know, double top, right? This would be a potential double top, not a triple top. Not 1, 2, but 1 and 2 that way. And here's your low, of course. Here's your trough. Measured move, yada, yada, yada. So the concept of price distance is in between peak and trough, signaling there was a move in a consolidation such that a reattempt at that level is more significant because you have had that reset, because you've had the reset from the peak to the trough. This is the concept of price distance in classical charting. And this is for the Trading Encyclopedia, the Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you so much, and I'll talk to you soon. Big Chads out.